The Reserve Bank of Australia has increased interest rates by 0.5% in June, the largest rate increase since February 2000. Joining me now live is business reporter Edward Boyd. Ed, the RBA's larger than expected rate increase really took the market by surprise.
It sure did, Danica. Not many economic forecasters were expecting the Reserve Bank to lift interest rates by this much in the month of June. They were expecting 40 basis points. Instead, we got a 50 basis point increase from the Reserve Bank, so 0.5%. We can put it up on the screen for you, a little graphic we've got, but basically this is the first back-to-back rate rises since 2010. So rates we know are going to continue going up. We can show you the cash rate since 2008. You can see back then it was at 5%. It slowly fell during the pandemic and it's now starting to creep up again, Danica, and we're probably going to see the cash rate at almost 3% now by the end of this year. So we're at 0.85% at the moment. We've got more than 2% to go to get to that point.
Extraordinary, isn't it? And I guess now the focus is for Australians with a mortgage. The rate increase means that there'll be extra repayments every month at a time when cost of living pressures are starting to bite, Ed.
These cost of living pressures are really adding up for a lot of Australians now. We've got rising gas prices, electricity prices, food and grocery prices are going up as well. So it's all adding to inflation. Another thing that's now going to add to inflationary pressures as well is Australians putting more money away onto their mortgage. So immediately, people's mortgages are going to start going up once the big four banks and others start to hike interest rates. So far, we've seen Westpac have done that. But look, on a $500,000 loan, 50 basis points will be another $133 a month in repayments. $1 million loan, it's $265 a month in repayments. So it's a pretty big increase for anyone out there with loans of that size. And by the end of the year, the cash rate, the expectation yesterday afternoon was it'd be at 1.75% by the end of the year, but it's probably going to be higher than that now. But a $500,000 loan, it's $442 more per month. And a $1 million loan, it's $885 more a month. So that's a lot of additional money that Australians are going to need to find over the next few months to start putting on their home loans. And they're going to probably have to start making sacrifices, not buying certain items. And that is what the central bank really wants to do to try to bring down inflation. It cuts out that discretionary spending, Danica.
And Ed, Westpac is currently the only bank to have increased interest rates for its customers, but surely it won't be long now until the others follow suit.
Surely the next couple of hours we're going to hear from the other big banks as well. Westpac did it last night at about 7 p.m. They lifted their interest rates for home loan customers by exactly the same amount as the Reserve Bank, by 0.5% more. So those changes will come in from the 21st of June. The other thing Westpac did was they actually introduced a new deposit savings account too of 2.25% interest. So this is a product that used to exist a few years ago during the pandemic. Basically, deposit accounts basically weren't equitable for banks to do, but now they're starting to bring them back so people with large amounts of money can put them into a term deposit at 2.25% with Westpac. So that's a nice little product that is now we're going to start seeing that come back into the market over the next few months.
Okay, Ed Boyd, thank you. We'll see you again soon.